Hello, everyone. Today on the final bar, my guest is Samantha LaDuc from LaDucTrading. We're going to talk about growth versus value, relationship to interest rates, sort of this big picture theme. I want to welcome on my guest, Samantha LaDuc. Samantha is a frequent guest on the final bar, always brings a good big picture perspective to help us make sense in uncertain times. Samantha, welcome back to the show.
Hey, thanks so much. I'm really glad to be back because we get to kind of do this quarterly review of last calls, and this is timely. We get to revisit one.
There's a lot happening right now and certainly feels rotational overall. We're starting with growth versus value. Give us a sense of how you're seeing things right now.
Okay, well, first I got to go backwards before I go forwards. The last time I did this final bar with you actually was August 20th. And it was right after I had made a call with clients, and I had also done a public post, which was I short gold and bonds. And the theme was, and this was basically beginning of August, that it was time for bonds, bond bubble, if you will, some of the froth to come out, gold to come down. And since then, they are obviously, gold really corrected more in time than price, but bonds had their biggest peak to trough sell-off ever. So, and it's still not done. Right now, what we're having, I believe, is a bond bounce, which is very much because of end of month quarterly rebalancing by pension funds, which also, by the way, is a decade big rebalancing. So out of equities and into bonds. So I fully expect a bond bounce, which we're getting, but then watch out come April. So I do not think the bond lows are in, and I'm talking specifically TLT as an example, but this was also a theme that I revisited when I was graciously invited back first of the year for the 2021 StockChartsTV predictions. And my number one theme was small caps over medium, medium over large. And all this growth to value chart really emphasizes is that rotation from growth into value, meaning that value would outperform growth, that large cap would stall. And it really did. September 4th was the top. And if you look at a lot of the big tech plays, you'll see a lot of sideways for the past 6 months, while small caps have been hot fire flames, right? Not just the, Biden bid into the election, the blue wave, all the stimulus expectation, not to mention the Pfizer vaccine announcement, November 9th, and then energy just took off strongly November through, and then especially January, February, that has now led. So last year, energy was the laggard, right? The bottom of the pile as it relates to sectors with poorest return, and tech was, of course, number one. This year, it's energy. So they have risen, and now we're in digestion period the past month, obviously post FOMC, when we have this rotation. I believe, quarter end with rebalancing, we have a definite change of sentiment as it relates to the growth plays. They are in trouble. Those who are holding the growth plays, are they going to recover? Are they taking profits in advance of, capital gains and harvesting, if you will? Before tax deadline, or fear of increased taxes. But long story short, the theme that I had last August when we talked, that bonds would go down with gold and this growth to value rotation would kick in, which means value would outperform growth, has absolutely transpired. And then the first of the year with the predictions, they were going to be very strong. They have been. Now I look at this bottom panel where it's yellow highlighted. This is an indicator, but it's basically telling me it's not done. And the mountain, if you look where the yellow arrow is pointing down, this is a very large mountain to climb down. So I think this is still going to outperform growth over versus value is going to be challenged. I think it's going to have a tough time.
So as you think, Samantha, about this, the coming months, and, obviously a lot of these names have had exceptional runs, right? Energy stocks have rallied beautifully. Banks, regional banks have done incredibly well on rising rates. So the movement that we're seeing in, this week, where we're seeing the rotation lower, we're seeing things be under pressure. This, to you, am I right in saying this is more of a short-term rotation of sorts, and then it's back to value over growth and continue to lean into those value areas, things like financials, industrials, or how would you think of it differently?
So financials, I'm a little bit more suspect of. I will tell you right now, industrials and boring old tech, and definitely I think energy will have a resurgence, especially going into the summer months. We're going to continue to have rising CPI. You know, May's report for April will show strength. June's report for May will show strength. So I still think the energy sector is going to perform, again, relatively outperform a lot of the growth stuff. And I think a lot of new traders who came in last year don't realize is that their high flying ARC, components, or ARC ETF itself is a duration trade. And as the long end has continued to rise yields, and you can show that next chart, it isn't just higher yields, but take a look at that rate of change. If you put your green circle around that yellow arrow, that's a 100% rate of change increase. This has never happened in the history of the 20-year. I can show you the same thing with the 5-year, and look at the head and shoulders underneath, which I was showing clients last year saying, ooh, we're in trouble. This is a new interest rate regime. So with that, tech is a duration trade, and they don't understand that. So I would definitely err on the side of value investing. There will always be select stock picking within the tech space, but you can see what's happened with the SPACs. And I think Bitcoin right now is also going to have some issues with a rising dollar. And I think treasuries are having a tough time fighting this inflation. So it's going to now be the baton passed over to a rising dollar to help fight inflation. But we have it. We have inflation. We're going to have higher yields and that relative strength with value. Although the easy money has been made, I still see it as outperforming growth.
Samantha, we'll have to leave it there. It's such a great perspective. Appreciate you sharing some big picture thoughts. So much going on. And you really helped to cut through a lot of that noise. Samantha LaDuc, thanks for joining us. Be well. Talk to you soon.
Thank you so much.